Hi, I'm Daphne, and in today's Market ABCs, we're going to learn more about consolidation. Now, consolidation is a term that you'll hear quite often in the market, and it's important that you know what it is as well as how to spot it because it does happen quite often. And during consolidation periods, it's not the easiest time to make money. Okay, I'll explain why later on. So, it's important that you know how to spot it so that if you haven't made a trade yet and you realize that whatever it is that you want to trade, the price is going into consolidation, in which case you may want to wait until after the consolidation to make your move. Okay, so let's get into it. So, consolidation, what it is, consolidation is a sideway movement. Okay, so it's going to go like this. All right, it can happen for like a couple of days or even like sometimes stocks can consolidate for like a month or two or other products as well. Okay, so what it is a sideway movement. I'll show you an example shortly. And when does it happen? So usually consolidation can happen after the price has broken a previous high or a previous low, meaning it's made a new peak, okay, or a new dip. All right. So, why does it happen? Because after something major happens in the market, which is like breaking a new high or low, the market needs to absorb that information. So, if you think about yourself as an individual, if something major happens to you, like maybe you just got news that you got a promotion, okay, that you don't know whether you want to accept, in which case you're going to need some time to like sit down, maybe have a drink, and then like think about whether or not you want to take that promotion. So same thing, the market needs to absorb the information. Okay, so what it means when the market is consolidating is that the market is undecided, right? So it keeps going in this sideway movement until it's decided where to go. And then what happens after that is that it'll break out in either direction. So you'll see a break either upwards or downwards. All right, so I'm just going to show you a couple of examples. Let's start with an easy one. So this is gold, okay? So as you can see over here where there's a purple rectangle, can you see that it's trading between like a box? So the top line, bottom line, so it's like a box. The price isn't actually going anywhere, okay? Unless you're maybe a day trader, you wouldn't want to be trading this, okay? If you're a swing trader, meaning you hold a trade for a couple of days or a couple of weeks or a couple of months, when this happens, okay, you do not want to be trading it if you haven't already made a trade, okay? So, as you can see, there was a breakout. Okay, so well, this one didn't really break the previous high, but it was close. Okay, sometimes this happens as well. So, and then after that, it goes up. Okay, this one broke the previous highs. Yeah. And after that, you can see that it goes into this sideway movement where it's trying to decide where it's going to go. And then you see a breakout in the upward movement. Okay. So this is an example of consolidation. The easiest way to tell is sideway movement. All right. So next example, this is a stock. This is a Zoom Video Communications. So now you can see that Zoom here, okay, it has broken a previous low. Okay, so this was the previous low. It has broken it here, and then it has gone sideways, okay, from March to April. So maybe about 2 months, I would say, because it was the start of March. Okay, so sideways and then breaks out. So this is another example of consolidation. Now, previously I mentioned that consolidation is not the easiest way to make money because it gives you heart attacks, right? Like one day you see, oh, okay, I made some money. The next day it's going down and then it goes up again and down and up again. But actually, if you look at it, the price, let's say you entered somewhere here. By this date, the price hasn't actually moved anywhere. It's just been giving you heart attacks, okay? So unless you've already made the trade and you're intending to hold on, if you are trying to make a trade and maybe at some point, like somewhere here, you notice that it looks like a consolidation, then you may not want to enter yet. You may want to wait for the end of the consolidation, which is usually marked by a breakout in either direction, okay? So when it breaks past like the box or whichever way you want to find a trigger candle, that's fine, okay? So that's another example of consolidation. And we're just going to do a last one. This one I found interesting. It's actually recent. So I took a screenshot of this last night. And this is interesting because it hasn't broken out yet. Okay. So this is the US small cap, which is the Russell 2000. Okay, it's a product based on the Russell 2000, which is a small to mid cap US index. right? So you can see that, okay, it's been going up and up and up and up, okay, broke a previous high. So this was the highest point at that time. So it's broken that, and then it has gone into consolidation. Now, if you are a short-term swing trader, meaning you hold your trades for like 5 days at a time or maybe 2 weeks at a time, you can still trade this market, okay? Because as you can see, down, up, right? But the reason why these movements aren't so great is because if you can see initially in in this area here, okay, there are a lot of overlapping candles. So this is where the heart attack happens. One day you're on green, next day you're on red, you're in green, you're in red, you're in green, you're in red. Now that's not so great for your psychology, okay? So which is why we try to avoid consolidations. So right now, it's still within the box, okay, you can see. So where if you maybe you haven't made a trade yet and you intend to trade this product, then what you want to see is a clear break past the consolidation levels. Okay, so that's consolidation. It's fairly easy to spot. So you can practice on previous charts. Just open any chart and see if you can spot consolidations. Okay, it's a great way to get started with market movements. So I hope you enjoyed today's video, and I'll see you in the next segment of Market ABCs. Take care, and thank you for watching.